Ladies and gentlemen, it is Fed Day. Jerome Powell just wrapped up speaking, and I have all of the headlines that you need to know. First and foremost, it is being reported via CNN that Trump is likely to allow Fed Chair Powell to serve the remainder of his term. And in other headlines, Russia's Putin says he does not think it's wrong to hold a call with Trump and says he looks forward to that conversation. The Fed says labor market conditions have generally eased, unemployment rate has moved up but remains low. The Fed says inflation has made progress towards 2% but remains somewhat elevated. The Fed announces they will continue reducing bond holdings at the previously announced pace. And the vote in favor of policy was unanimous, in the Fed cutting rates 25 basis points today. The Fed will continue reducing bond holdings at a previously announced pace. US rate futures are pricing in another 67 basis points in cuts for 2025. And the Fed's reference that they have gained greater confidence in inflation moving sustainably towards their 2% target. Putin says they are ready to restore relations with the US, but the ball is in the United States court. Jerome Powell says the economy is strong and that inflation has eased substantially. And Fed Powell says the Fed took another step in reducing policy restraint. Jerome Powell says improving supply conditions has supported the economy. He also says hiring would be somewhat higher if not for storms and strikes. He goes on to mention that wage growth has eased and labor market conditions are less tight than pre-pandemic. He also confirms the labor market is not a source of inflation pressures. This is something we already knew. Jerome Powell says risks to achieving goals are now roughly in balance. He also says a rate cut will help maintain strength of the economy. Even though what we've seen in recent weeks is the Fed actually cutting rates has caused 10-year Treasury yields, that's kind of the barometer we look at to evaluate the yield curve, to broadly move higher. That has actually restricted economic activity. Now, some of the biggest headlines that really caught the market's attention, and there's one specifically, and we'll get to that in about 30 seconds, but first this one. Jerome Powell says he has heard that next year could be better than 2024 as far as economic activity. And my thoughts here are, okay, if economic activity is going to be great, and he's still cutting rates, then he's really not worried about inflation. That is massively good news for bonds that have been pricing in better economic activity and higher inflation. It's kind of like, yeah, bonds, you're wrong. And that is the big reason TLT is up 1.51% today, absolutely taking off after Jerome Powell started his conference. Jerome Powell says it appears that moves in bond rates are not mostly about higher inflation expectations, bond rates reflecting growth expectations instead. Jerome Powell confirms that one or two bad data months on inflation won't change the process, that they always expected things would be bumpy. This was the thing that was ultra bullish for bonds. Check this out. Jerome Powell says that everyone was freaking out about 10-year treasuries at 5%. And 2 weeks later, they fell 50 basis points. I put here in commentary, very bullish for bonds, because Jerome Powell's saying that this rise in bond yields is probably not going to last. And the Fed did also mention multiple times during the conference that if bond yields stayed elevated at higher levels, they would be more concerned. But that's basically like the Fed saying, yeah, bond yields have went up a little bit, but they're probably going to come right back down. Which again explains the rise in TLT that we are seeing. This is kind of what markets are starting to figure out, and I expect over the next couple of days, markets are really going to catch on to what Jerome Powell was saying. Jerome Powell says in the near term, the election will have no effect on our policy decisions. We don't guess, we don't speculate, we don't assume what policies will get put into place. Overall today, Fed Jerome Powell sounded like he's not concerned about inflation. Economic growth is good. The election outcome changes nothing about what the Fed is going to do in the near term. Like, this is kind of a perfect situation. Now, I did expect Jerome Powell would make a reference towards Trump's first term in office that we did not see inflation then, so there's perhaps no reason to expect inflation now, but that's kind of like what he said without saying it that clearly. Okay, so I was a little bit wrong there, but generally correct in the whole dovish for bonds, bullish for bonds in other words, and bullish for the markets. The S&P is up about 1% at the time of recording this video. The only thing that was really remotely bearish at all about Fed Jerome Powell today is he was asked by a reporter, would the Fed cut rates or raise rates in 2025? Jerome Powell said, well, it's possible, but that's not what we are forecasting. So like, Jerome Powell's acknowledging that there is a chance of a rate hike in 2025, but it would take some pretty dramatic changes to actually see that. So the markets didn't freak out too much, but that was one of the more bearish headlines. The S&P is breaking out to a new all-time high today, almost at 600 for the SPY, which is 6,000 for the SPX. And following the election results yesterday and a bullish Fed Jerome Powell today, the path is set for higher markets. That's just the inevitable at this point. Now, I think the higher we get, the greater risk of, a disappointment as far as economic activity. But we're just not seeing the markets that care too much about that. I said in the last video that you're likely going to get markets that go through a bit of a short squeeze, a de-hedging of risk on positions. These are puts, these are shares that are sold short or have been sold short over the past couple of weeks heading into the election. The VIX was consistently over 20 for about 2 weeks straight. That's a long period in time to have hedges on your portfolio. And now all of these events are coming, the Fed and the election being really the two biggest ones, and they're good. They're not bad at all. It's not something to be fearful about. So this deep risking that's happening in portfolios can push markets higher. And you're likely going to start seeing a chase in markets where investors, they go, oh, wait, big risk catalysts are over with. It's not bad. I mean, if anything's going to go bad, it's going to go bad in 2025 if there is tariffs, right? If there could be a possible rate hike. Like, we have nothing to worry about between now and the end of this year. Now, obviously, there's always a risk in markets, but that's kind of what the markets are saying right now. For that reason, you're likely going to see a chase into year end where hedge funds and institutions, they need to get reallocated to stocks and they want to catch up to the performance of the S&P, which is up over 20% year to date. This is pretty typical. That's why the end of the year tends to be a strong period for markets. And I don't think this time around is really going to be any different. As far as sentiment today for the SPY, this is actually fascinating. You have a bearish sentiment reading over on StockTwits coming in at 33. Yesterday, you were extremely bullish at 88. So kind of strange, markets are up again, but sentiment is actually falling a bit. Message volume is coming in high at 63. Yesterday was high at 77, so that's moving down a little bit. And the participation ratio today is normal at 53. Here today, the CNN Fear and Greed Index is moving higher. Today, you're at 60. Yesterday, you were at 57. Market momentum, extreme greed, stock price strength is fear, stock price breadth is fear, put and call options fear, market volatility is neutral, safe haven demand, extreme greed, junk bond demand, also an extreme greed. The percent of stocks trading above their 50-day moving average has recently risen a lot. Yesterday it went up almost 10%. Today, you're at 68.2% of all stocks trading above their 50-day moving average. That is up about 0.5% today. So just continuing that upside momentum. The latest AI investor sentiment survey that came out last night shows bullish investors at 41.5%. That is up from 39.5% last week. So that's up about 3 points or so. You can see neutral investors jump from 29.6% to 30.9%. That is up about 1.5%. And bearish investors dropped about 3 points, 3%, from 30.9% down to 27.6%. So the highest level of bulls you've seen since at least early to mid-October. Here today, the VIX is down 6.2% to 15.26. So you're seeing another day of this taking off of risk hedges, right? So you've put on a lot of risk hedges heading into the Fed and the election, and now you are taking those off. And this is risk on for markets. 10-year Treasury yields today are falling to 4.335%, down about 9 basis points at the time of recording this video. We did get initial jobless claims today that came in a little bit higher than last week. Last week you were at 218,000. You came in at 221,000, which was roughly in line with what was expected. Continuing jobless claims did move higher to 1.89 million versus last week at 1.85 million, and the consensus was 1.88 million. So continuing jobless claims marginally higher. You also did have consumer credit change that was expected around $15 billion, and it only came in at $6 billion. So that's a sign of maybe the consumer starting to pull back a little bit, although this data came out when the Fed was speaking, so markets didn't pay too much attention to it. So ladies and gentlemen, that is going to do it for this video. Hit that like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.